We recently added a new strategy called Soybean Swing. We talk about it here on this page. It's over here on the right. You can click on soybeans back to 1984 and you'll see that latest. We've got an update on that. We tested on 15-minute bars and we still use a 15-minute pattern, but we're using that as data too and testing it down on 1-minute bars for accuracy. I've also eliminated any trades that might have been triggered on a limit move. So there was a previous trade on this bar. You can't sell short. It was a short signal. You can't take trades on limit bars. So I used a simple filter that the high of this bar minus the low of this bar has to be greater than 0. And on limit moves, you just get a straight line. So you eliminate those. And I want to take a look at the results going back. And you can see over here on the right, we go all the way back to 8/1/2006. That's when soybeans started trading electronically intraday, and that's the electronic. On the left, you have a pit. I've delayed data for pit because I don't use pit markets, but I can still get those and test those. And this goes, soybeans goes all the way back to 1984, and you can see the data gets choppier here towards the end as it transitions to electronic. But we're testing it right now all the way back to 1988, and I'll show you why. I want to take a look at the similarities on this, and this is also available in NinjaTrader. Now I've converted, it's available in all 3 platforms. So taking a look on the right, you see 8/1/2006 to the current date. Here are the results. Average trade profit. Here's the drawdown. And here is the equity curve. So what happens before 8/1/2006? Take a look at this drawdown. It's about the same. We got 700 trades now. Going back to 1988, you've got about the same drawdown, $107 average trade profit. The closed trade drawdown is a little bit less, 1,007 trades. Still over a longer time period, about 20 years versus about 8 years. And so 108,000. Here's the equity curve. Nice equity curve. Kind of went through a flat period from July of 2004 until July of 2006. About a 2-year flat period, and then it picked up. You flip over here. This ends on 7/2006, and this picks up over here. Soybeans went electronic, and then so it picked up again, moving forward, and then it's kind of gone through a 2-year flat period again. August of 2011 through August of 2013. It's kind of a flat period. A lot of systems can do this, go flat for 2 years, and then it's kind of picked up again. And so it's picked up again, and it's in a drawdown. So I think it's a good time to start trading this strategy. If you want this strategy, there's a lot of good history. Developed it on the electronic session, and then back tested the exact same rules on the pit session. Now, if you go back to 1984, it's a bit choppy, and the drawdown goes to 12,000. Almost 12,000. So I'm going to do that. But since December of 1988, this thing is really consistent. There's a couple of periods of sideways motion. There's periods of drawdown of about $6,000 to $7,000, and then since 2006, same thing. Some sideways periods of about 2 years, drawdown of about $6,000 to $7,000. But really good results for this long of a history for the exact same system on pit and electronic. And going to go take a look now. I'm going to pause the video, and we're going to look back to 1984 just so we'll know the whole truth. So I set the date back to 1980, and as far back as my data will go is 1984, and you see it goes to $11,000. We started our last data set here, and before that time frame it's still profitable but a little bit more volatile. So back to 1988, this works great. So this is available, the strategy is available in Tradestation, MultiCharts, and NinjaTrader, and you can sign up. I'll have a separate page for it soon.